Yo, what's up? It's your boy Will Motivation, and today we're talking about my advice on the number one way for you to get started investing in real estate.
So we're gonna be sharing some real knowledge and real experience.
Maybe a few war stories.
Got free war stories. We got Rich here, my realtor. We got some concepts we want to share. So he's sharing a concept with me, and I figured why not record it, because Rich has a lot of knowledge. He's my realtor. I've done 90% of my deals with Rich.
Only 90?
I did have a couple that fell on my lap, but Rich has been instrumental to me as I've grown my real estate portfolio. So we'll probably get into some background of our relationship as we go, but I kind of wanted to hear what your ideas were, and
Sure.
And you know, like I said, Rich has a wealth of knowledge. So every time he opens his mouth, something good is getting ready to come out. So
Sometimes.
so what you got?
Okay, so a lot of people think about when they're purchasing a home,
Mm-hmm.
what's the biggest home I can get? What's the fanciest home I can get? What's what's the absolute best I can buy?
Mm-hmm.
Now, there's a theory out there that says that there's assets and liabilities. If a home is just something you're living in and it's not generating income,
Mm-hmm.
it's a liability.
Yep.
Now, with that being said, everybody out there will say that owning your own home is the start
Mm-hmm.
to getting any type of investment underway. So there's a different way of thinking about it. The way you think about it is more, how much would a home rent for that I'm looking at?
Mm-hmm.
And then, instead of evaluating the home based upon, well, I want the granite countertops, I want the fancy carpet, I want this, I want that. Instead, you look at it as, what would it rent for, and what could I pay in rent? Now, most of the time, your payment on a home is going to be less than what the actual rent is on that home.
Yeah.
I mean, the definition of rent is paying someone else's mortgage.
Yep.
That's pretty much it.
Mm-hmm.
So let's say you and I were looking for your first home.
Mm-hmm.
We go out, we start looking, but instead of acting like the typical home buyer, an investor will look at that home from a standpoint of, how much could it rent for?
Mm-hmm.
What's the cash flow on it?
Mm-hmm.
Am I buying it below market?
Mm-hmm.
Okay. So we go out, we look for your first home. Let's say that, you're making 35 grand,
Mm-hmm.
just as a number.
Mm-hmm.
The generic rule of thumb is you can afford a mortgage up to 3 times your income.
Okay.
Now, that's assuming you've got average debt, average stuff.
Mhm.
Okay. If you want to go to Vegas 3 times a year, the multiplier goes down.
Mm-hmm.
If you're a homebody and you're frugal, that number can go up. Now, you'll get approved for a mortgage that's a lot bigger than that. I mean, you've been there.
Mm-hmm.
That mortgage you get approved for, if you buy all the way at the top of it, you're eating macaroni and cheese.
Mm-hmm.
Okay? So, with a first-time home buyer, we can go out, look at a property, but where you're hamstrung as an investor, you got to put down 20%, 25%, something like that.
Right.
A first-time home buyer, there's all kinds of special incentives for first-time home buyers. You can actually get into a property for 0 or next to 0 down.
And what are the realistic ways that someone can get into a property for 0 down or close to 0 down?
Well, here in Ohio, we have a thing called the Ohio Housing Finance Agency. Okay. In the business, we call it OFA. Okay. Basically, every state is going to have the equivalent to this. Mm-hmm. It's basically a government-funded program to encourage people to purchase their home. Mm-hmm. Here in the state of Ohio, you can get up to 5% of your down payment and closing costs as part of the deal.
Wow.
So it's built into a grant on the deal. Let's take there's all kinds of programs through OFA, but let's say someone graduated from college within the last 4 years. Literally, they can get given to them 2.5% of the purchase price of their home. Given to them.
And then with the first time home buyer, they're usually looking at an FHA.
Could be FHA. There's other programs out there though. A local bank here, they have a 3% down program. Okay, 3% down on the deal, and you can go buy your first home.
So for those of you that are thinking about this, usually when you purchase a home, you've got to have some money down, and so 3% down is exactly that. So if the price of the home is $100,000, you'd have to come up with $3,000 to show the bank that you're serious, you're responsible, and you have some money to put towards the house, and that would be your down payment. So 3% down would equate to $3,000 on a $100,000 loan. But it could go up or down depending on the price of the house, obviously. So that's what we're talking about. And I think the reason we kind of started to talk about this concept is because a lot of people watch my channel because they're thinking about investing in real estate, but maybe they have not even yet purchased their first home. And so the start, like it was for me, was purchasing my own home. Then I had a second home that turned into my first rental property. But you know, you've got to start somewhere. So
right.
That's just some context.
Well, a lot of people think they need a big bunch of money to get started. You don't. The overwhelming majority of the people that I run into in my business think that they need to put down at least 10% down on a home. Sometimes they think 20 because that's what their parents had to do.
Right, and that's what commercial investors a lot of times might have to pay after we have a certain number of properties.
Right.
But question for you.
Sure.
Are there usually stipulations for, let's say you're a first-time home buyer and you're thinking about being an investor in the future?
Mm-hmm.
Do you have to usually stay in the home for a certain amount of time before you can turn around and rent it out?
Well, let's talk about, I mentioned the people who had just graduated from college. Okay. Within 4 years, you can get 2.5% literally given to you. And you can get another 2.5% by paying just a little bit higher interest rate. Okay. So you've got 5%. 5% is going to cover your down payment and is going to cover your closing costs. And if not, we can structure deals so that literally you can walk into the deal with nothing down. Okay?
For people who are hearing some of this for the first time, can you just quickly break down closing costs? What's usually incorporated in closing costs?
Well, the bank is going to have certain fees that they're going to charge you, whether it be something as simple as pulling your credit report, which they're going to charge you for, to getting an appraisal.
Appraisal.
Sometimes there's an origination charge, depending on who the bank is and what kind of loan you're getting.
What does that mean, origination charge?
Basically, it's what pays the loan officer.
Okay, so basically you're paying for services.
Right. They may have an underwriting charge, again, depending on what the loan is that you're getting.
Mm-hmm.
You're going to pay for title insurance to protect the bank to make sure that they're the first in line.
Mm-hmm.
You're going to pay the person who actually sits there and notarizes the documents that you fill out.
What's the largest portion of the closing costs? Because I've sold homes at a variety of prices with Rich, and my closing costs are higher for bigger properties and lower for smaller properties. So if you could break that down.
Well, the bank fees are probably going to be your largest expense. Now, with that being said, if you shop banks, all banks are not the same. You can shop banks and see who has a better deal for you. Now, you and I have talked about this on investment properties, but it's exactly the same for someone buying their own home. If someone is out looking to buy a car, they'll go to the Toyota dealership, they'll go to the Honda dealership, they'll go to the Kia, Chevy, Ford, they'll shop around. But for some reason, when it comes to getting a loan for their home, they don't shop around. Now the cool part is there's new rules that came into place. They're going to give a loan estimate to the person who's buying that house. And that loan estimate's going to be on a form that the government mandated. So when you go to the bank right around the corner from you or wherever you have your savings, they're going to put this estimate on a form. And then you go to the next bank and you check with them, they're going to put the exact same numbers on the exact same form. So you can lay them side by side and see what's a better deal. Now, if you have money in the bank, you can get a better interest rate than if you're going in with no money down. But let's talk about interest rate for a minute. You don't really worry that much about your interest rate. You do, but you don't worry about it as much as you worry about the cash flow on the property and how much cash out of pocket you got to spend.
Right.
I can get you a great rate if you're putting down 50%, but that doesn't leverage your cash very well.
Right. And so what Rich is talking about with leveraging cash is basically the more cash you have, potentially the more properties you can secure, because you can use part of your cash for down payments towards properties. So if you use all of your cash in one property, you have none left over to acquire other properties that you might come across. So that's kind of like what Rich is talking about.
Or as a safety net in case something
Yeah,
happens.
yeah, absolutely. So you've got to do your rehab, and then you may you always have unknowns when you purchase investment properties or a property for yourself. So it's good to have some cash, on the side to take care of those types of issues.
Right. So anyway, plus when we're talking about buying below market, you can get rehab loans where you build into the loan the cost of fixing up the property.
Yeah, I've done that before. Yeah.
Now, sometimes it's good to do that, sometimes it's not, and I know your subscribers are sitting here going, wait a minute, he's going back and forth. Literally, each person is an individual person, and each house is an individual deal.
So tell everybody sort of your idea, and then we can maybe get some feedback from the subscribers on the channel on which direction they like to see us go. Because Rich and I have talked about doing some videos, sort of some educational videos. So my slogan, I come up with my slogan for the channel. It's create, educate, and motivate.
There you go.
So we've come up with some ideas that we want to do some videos together. Rich has much more knowledge and background in real estate. I mean, like I said, he's my realtor. I'm not a realtor. I'm more of an investor. So we thought about kind of putting our heads together and our efforts together to come up with some videos where we can just basically educate folks on different aspects of real estate. So Rich had an idea when he came over, and maybe you can share some form of the idea and maybe a couple of directions we can go. We can get some feedback from the audience.
Sure. Well, my idea when people are buying their first piece of real estate, I think that they should treat it like an investment. When you bought your first home, did you have any clue what you wanted?
As far as going in an investment direction, or
even living there? You
not,
had an
not
idea.
a lot. Yeah, just an idea.
Yeah, you had an idea.
Location more than anything.
Yeah, but you had an idea, but you had no idea what life was going to throw you.
Right.
You had no idea all the stuff that happens that changes where you want to live and the things you want to do. There's very, very few people anymore that buy their first home and then live there for the next 45 years.
Right.
Okay?
Right.
So my idea is, if you're going to be purchasing something that you're probably going to be selling in about 7, 8, 10 years, you might as well buy it as an investment. Now, the exception is you're going to live there. So you're going to look at this property and say, number one, I'm going to buy it like an investor. I'm going to buy this property below market value. It might need some work, might need some help, but I'm going to buy it below market value. I'm going to live there, so I'm going to pay myself rent. So let's say that your payment is $600, okay? But it'll rent for $900.
Yeah.
Well, if you can't afford a $900 rental payment on that property, you're living too big. So you pay yourself $900. Now that $300 a month, that's your cash flow.
Mm-hmm.
That's what you're saving to go into other things.
Mhm.
Or that's what you're using to pay down the loan on the property
Mm-hmm.
to give you more equity. And what I mean by equity is what the property is worth versus what you owe on it.
Right. So if the property is worth 100 grand and you owe 80,000, your equity is 20,000 gross.
Correct. So basically you buy a property that you're going to rent from yourself.
Mm-hmm.
And that's the mindset that you get in.
Mm-hmm.
You use that property as an asset
Mm-hmm.
instead of a liability.
So how do we tie that into like a video?
So now we can actually show people how to go from purchasing your own property,
Okay.
what the process is for doing that, and how to evaluate those properties. And then how to get the maximum improvement on the home so that you build the value of the home without shelling out the same amount of cash.
Okay.
And we can show them then how to leverage that money
Mm-hmm.
and be able to go and purchase
Right. The
a
next-
rental property.
So do you have a guinea pig in mind? Because if you don't, I have one. Greg, if you're watching this, Greg, you're the guinea pig.
I was going to use you. No, I'm joking. No, literally, we could utilize a person.
Greg would be a perfect example. Greg is actually did a transaction with us when I sold. I think that's the most recent deal where I sold a house. But his numbers would be a perfect example. His numbers, and that's what he's trying to do actually.
Right. So, literally, we could walk people through this process, and they don't teach this stuff in school,
Right.
and it's a shame that they don't.
Right. But we're gonna do it on this channel here. So just stay tuned. Subscribe if you haven't already.
And there's a lot of conceptual things out there, but I'm talking about actually, let's go out, look through a property. Let's talk about what it takes to rehab it. Let's talk about how to finance it.
Mm-hmm.
Let's say your credit's messed up. Yeah, I've got people that can help you straighten up
That's
your credit.
actually a big that's a big area that people want to, and we talked a little bit about it, that people want to learn more about, and you know I'm still learning that as well. So.
But this is just a general overview of, okay, let's go get our first house, and how can we leverage that first house
Mm-hmm. To invest.
to start investing?
Yeah. All right. I like the idea. I think it's logical, and we should do it. You guys let us know what you think. I think I have a guinea pig. Like I said, Greg, if you're watching, we're coming to your house. Maybe we can sit down with Sherry.
Sure.
We can do a mock closing, just like we did with Greg. We can show you what goes on during closing. Maybe we can show you what you would do walking through as a a new home buyer, and then work your way through leveraging that property to invest in your next property. So.
And literally thinking like an investor is a whole different mindset than I need to get a house for me and my spouse
Mm-hmm.
and my kids.
Right.
That is one thing.
Yeah.
But let's add one thing to it. Start thinking like an investor when you're doing that.
Mm-hmm.
And then use that asset that you're buying.
Mm-hmm.
And instead of it costing you money,
Mm-hmm.
learn how it can make you money.
Sure. I mean, I sort of did that with this house.
Yeah.
I didn't think quite like an investor when I bought my last house next door, but when I bought this one, it was like, give me an empty shell, and we actually had it sold.
literally though, guys, I've been in the real estate trade for, I started in 2005, and before that I used to run big companies. Will's going to get embarrassed. He didn't know I was going to say this, but Will's one of the smartest guys that I've ever worked with, and that includes some people that ran some really, really, really big companies.
Appreciate that.
And he is legit. We were just talking before we got on camera, everybody dreams of starting a YouTube channel and all that. Will's doing this because he wants to help people out and show them what to do. And yeah, sure, every once in a while he might put a plug in for something, but you know what? That's not the reason he's doing this. He's doing it because he wants people to be able to learn both what he knows And things he's done wrong,
Mm-hmm.
I can certainly tell you a lot of things that you can do wrong.
Mm-hmm.
And sometimes that's the most valuable part
Right.
of people like me, a realtor.
Mm-hmm.
Yeah, you've got an idea of the home you want to buy, all that kind of stuff, but how are you sure that you're doing the right thing?
Right.
It's not my job to decide, but it is my job to educate.
And I appreciate.
But no, guys, if you keep watching him, he literally started just with a little bit of knowledge, developed an awesome company. From that, started investing in real estate. And when he first told me what his concept was, I kind of raised my eyebrows. But now I'm a believer. I'm a true believer because I've seen what he can do.
Appreciate that. And you've helped me out a lot along the way. And like I said, Rich has been instrumental. To be honest, I don't know if I had not have met you, I don't know if I would have gotten as far. I knew I wanted to invest in something, but I don't know if I would have gotten as far as fast if I had not have met a good realtor, and you're that good realtor for me. So I appreciate that. And
Well, a great story to leave with
okay.
is when we first met. I can remember it like it was yesterday, although it was what, 2010?
10 or yeah,
Maybe.
2010.
Anyway, I was sitting in my office. It was a Friday afternoon. The phone rings. Will is one of the most impressive guys you'll ever meet in person. But if I was to criticize him on anything, he's not on the phone.
Yeah, I don't like being on the phone at all.
He mumbles when he's on the phone and all that. So he calls me. I had a date with my wife. We actually set aside date time, okay? So I had a date with my wife. It was a Friday afternoon, and where Will's at, there's some pretty nasty traffic over here. So he calls me up and he's mumbling through, and I couldn't understand what property he wanted to see. And then he tells me, well, this is a property that I had for a long time that no one wanted to buy. And I was like, oh man,
Brutal.
I got to drive all the way across town in the worst traffic ever. I got to call my wife. I got to tell her that, yeah, we're going to be delayed. And we met over at the property. Now, it got a lot better when Will walked up. And I mean, he has a way about him that just commands respect.
I appreciate that.
And those kind of people I'm attracted to. And we walked into the property, and it was so funny. I start showing him around the property, and he says, yeah, he says, this is kind of what I'm looking for. How much do you think we can get it for? And okay. And he says, I presume cash will work. And I was like, yeah, that'll work. It just so happened that just prior to that, I had shown every single foreclosure property that was over in this area, literally the week before. And Will says, hey, I'm thinking about picking up a couple properties. Do you know anything else? And I was like, yeah, sure. So we went out and we looked at about 6 or 8 properties, I think. And Will bought 4.
Yeah, we bought 4, and yeah, I should have bought all 6 if I had some banking relationship. But yeah, you're right. That was May of 2011. That first property that we saw, we got for $60K, and we sold it for $113,000.
Plus the cash flow you got on it during the years you owned it.
Right, exactly. So that's a real life story. The other property that Rich showed me in that time period, we purchased for $55,000. We sold it for $103,000. The other 2 properties I still own, but I can tell you, one of them I got for $90,000, and that one is probably worth $170, $160
At least.
Yeah.
At least. That's the 4-bedroom attached?
Yeah.
Yeah.
So this is real. Like, so we're gonna be sharing some real knowledge, real experience.
Maybe a few war stories.
A few war stories.
Things you did right, things you did wrong.
Things did right, things that did wrong. Some houses. I get excited. It's funny because we walked into some houses a few times where they were just trashed. They smelled like urine from animals, and the worst shape ever, and I would just get excited because, you know, we bid on these properties, and the more, you know, tore down the property is, the more excited I would get, because it made me think that I have a better chance of actually winning the bidding process. And sure enough, we got some really good deals.
And you have less competition the worse shape the property's in.
Right, and it's funny.
Everybody's looking for the perfect property.
Right, everybody's looking for the perfect property, but it's funny, those properties that were in some of the worst condition were some of the easiest rehabs. Seriously. So I don't want to speak too long. We've been talking for about 30 minutes, but you know, you guys let us know what you think, what you'd like to see us do. Now that we have Rich kind of with his wealth of knowledge from a realtor's perspective, we'll do a series with Rich, and then we'll just share more information with you guys. So thanks for watching, and look forward to seeing more of us.
Hey, I just wanted to say thanks for watching today's video. There's a lot more to come. Hit that like button for me and subscribe to my channel. A lot of you guys have been asking me about when is my online course going to be ready. Well, I have good news for you. My online course is completed. I'll put a link in the description of this video where you can click on that link and get a 40% discount off the course. That'll be for the first 50 students. So if you're ready to take the online course that I've basically laid out everything that I know about how to invest in real estate, click the link below or just go to www.willmotivation.com/invest. And thank you guys for taking the time out to watch today's video. Hope you learned something, and I'll see you in the next one. Peace.